Good morning, good afternoon, and good evening, everybody. Welcome to the Nest. Welcome back to the Nest in 2022. It's January 20th, 2022, and I'm Jim Chu in San Francisco, California. And we're streaming live on Stonks.com with entrepreneurs and investors from around the world. We're here today on the Nest to connect international investors worldwide with the most promising entrepreneurs from emerging markets, especially those in Africa. We stream live the third Thursday of every month, and all episodes are recorded and available on our website, untapped-global.com. And today, we welcome two very high-growth African startups to the Nest. They'll be pitching to a panel of seasoned investors from the US, Haiti, and the UK. But before we introduce everybody, a quick shout out to our co-hosts today, Invest Africa, and especially Stonks.com. Thanks for co-hosting with us. And especially at Stonks.com, and thanks to them, accredited investors can invest on the spot or at least get intros to the companies they're pitching to. And we love Stonks, and we'll show you in a second how it all works. So over to a quick introduction of our angels. Now, welcome back, Raj, to the program. You've been on the Nest quite a few times in the past, and you've done quite a few investments in 2021. Can you give us a quick intro?
My name is Raj Kulasingam. I'm a lawyer at the international law firm Dentons. That's with the one hat, and with the other hat, I'm an active venture investor, investing with my partner Michele, who's also been on the Nest a few times, out of Nairobi. We had a stellar year last year, maybe stellar in hindsight, but let's see whether in the future it turns out to be stellar or not. We did 33 investments last year, about 18, I think, on the continent. Very excited that about 5 or 6, maybe even, of those were companies who either appeared on the Nest before we invested or appeared on the Nest after we invested. So excited to be here. Thank you.
And did I read somewhere recently that you guys are creating a SPAC for investing in African companies?
That's absolutely correct, Jim. That's just hit the press, and we've had a lot of excitement, publicity about it. Yep, that's the plan for 2022, or certainly that's the plan that's being cooked up for 2022. So we've sort of looked at the funnel from the bottom up, and now we're looking at the funnel from the top to the bottom.
Got it. And one last question: how did you get a middle name of karaoke? I'm not sure if I understand that.
Jim, that was inspired by an amazing performance. And those of you who haven't seen it, Jim is on LinkedIn with Tayo Oviosu, who's the CEO of Paga, in his car. I mean, the coolest bit about that performance, Jim, was not the singing, but the fact that you could do karaoke in your Tesla.
Okay. Wasn't my singing? Are you kidding me? Okay. So what was the most amazing thing about it?
Say again?
What was the amazing thing about it?
The fact that you were hands off the steering wheel, you had the karaoke words on your screen in the Tesla, and you both were singing. And I promised to give you singing lessons. That's my gift to you for this year.
I'm going to drop the link in the comment box for anyone who really wants to win.
Please do. It's quite a laugh.
Oh boy. Well, maybe perhaps during the commercial break, you'll indulge us with some singing lessons for all of us.
With you, my friend. With you.
Well, welcome back to the show, and I hope you ask some really hard questions, and hopefully some of these guys end up in your portfolio. Over to you, Lori.
Hi, everyone. Thank you, Jim and team, for allowing me to be here. I love this program. Such a pleasure. So my name is Lori Fuller. I'm a venture partner at a fund called Raven Capital. It's an early stage technology global fund with headquarters in Silicon Valley, Canada. I'm also an investor and advisor with a couple of other funds and a certified executive coach and advisor of startups and scale-ups with Stanford Seed, focused in East Africa. Raj, I think no better time than the present. Maybe at the end we save some time and those singing lessons can be live. I'm ready to see all
I'm up for it. I'm up for it.
Why not?
Oh, yeah, I'm sorry. I forgot to tell you, Lori, and all the other panelists, including entrepreneurs, that Singing is a requirement for
no funding unless you sing.
requirement. In fact, you have to sing a Frozen song. I mean, we'll give you a choice of which Frozen song, but it has to be
We're not doing Frozen, okay?
You know what? I need to get in my Tesla so I can put the lyrics up in front of me.
Oh boy. All right. Well, welcome to the show. And again, please ask the hard questions. These guys can handle it. Now, over to, last but not least, Laurent Lamotte. Welcome to the show, Laurent.
Thank you very much, Jim. Thank you, Raj. Thank you, Laurie, Lundi, for this wonderful event that you guys are organizing that's helping so many startups and entrepreneurs around Africa and around the world. This is my third participation. I'm the former Prime Minister of Haiti for 2012-2014. I also started investing since 98 in Africa. I've been created Global Voice Group in 98. And I'm also the founder and board chair of Our Ventures. And so far, we've done 14 investments and 12 of them are on the continent. So we're looking forward to doing another 15 for 2022 and growing from there. So it's an honor to be here and to support the Nest.
No, it's been great having you on the show before. And also, I know you also spent some time in South Africa. We'd love to see you do some more investments in South Africa as well.
Yes, I invested in Better Bank. I'm thinking of doing another investment there because I see that these guys are moving, very nicely. But I'm looking forward to definitely investing at least in 5 companies this year in South Africa.
Excellent. Well, hopefully we can work together on some of those investments as well.
100%.
Well, great. Well, again, welcome the 3 investors, and please do ask the hard questions. As the format will be a very quick pitch from the entrepreneurs, 2 minutes max, but then you'll have 20 minutes to ask questions and have a discussion with them. So I hope that you're ready to really grill these guys because I think the audience really wants to hear the details on each of their businesses. So over now to, very quickly, the Stonks platform. Can you really invest on the Stonks platform? Well, we do have a surprise company today. And I don't know, if, John, I think you're in the background. If we can put that company up. The surprise company today is Goober.com. And well, everyone knows what Goober.com does, but you'll get a chance to actually try out the investing platform and the Stonks platform. So let's take a quick look. How is that coming along? Can we see what's on screen? I don't know if anyone.
Yep, Goober's up there. Goober's pitch deck and everything is up there.
I'll give you a quick 20-second pitch on Goober. Goober.com is one of the leading pioneers in figuring out how to deal with hair gel, because hair gel always is messy. It's always been a problem. No one ever talks about it, but you know what? This is a better hair gel. So if you want to invest in the future of hair gels, this is the way you do it. So now investors out there can show their interest. They can make comments. They can say, please try it. And that's the whole point. We have Goober up there. Please click those buttons, make those comments, and see what happens. I can't see that screen right now, but is anything happening? Are you guys making
plenty investments? I pledged $250K myself. I love hair gel.
It's a
Cat
good bet.
George, $10K. John Hancock, $250K. Matching me, Shane Smith, $250K. Genevieve Richards, $100K. Davis, $1 million. Davis coming in on top. So Uber's well on its way to its Series C.
Pockets. I love it. I love it. So as you can see from the bottom of your screen, that progress bar will move until we hit the goal, and that's always interesting when we see companies oversubscribed. So I hope we see that on this session. All right. So that's how it all works. But we also want to hear from the audience. This is interactive forum, so please use that chat box to make comments, to introduce yourself, to talk about your experience with the company, if you have experience with any of the companies pitching, and just generally keep this a live forum. You can even ask questions. We'll try to pick out the most relevant questions and put them and say them online. All right, now let's head over to the entrepreneurs. Ahren from Momint, welcome. Let's see, are you online?
Can everybody hear me?
Yes, we can hear you, and we can see you as well. Wonderful. And I see Inspira's presentation on, and then Momint, I'm sure you can put yours on as well. But just before we get started with your pitch, just a couple of words about yourself. Where are you, and when did you start Momint?
Yeah, so we're based out of Cape Town for R&D, but we're incorporated in the UK. And we started this business midway through 2021, so it's very new, but things have just been going really upwards from there, and I'll save the detail for the pitch.
Okay, well, great. Well, then let's get started. You have 2 minutes, and I will cut you off.
Okay, great. So hi, everyone. I'm going to tell you about Momint. Momint is social media for Web3. We act as a content marketplace powered by NFTs. This means that we can be completely ad-free and privacy-centric. We provide an easy on-ramp from crypto to fiat, and you don't need any crypto wallet or experience required to get started. Despite all the buzzwords, Momint takes a very practical approach to the NFT and blockchain market, focusing on simplicity, value, and utility. Momint was born in mid-2021, and to date, we've raised $600,000 in seed funding. We've done $104,000 in sales, and we now have more than 10,000 users all around the world, this number roughly doubling month on month. We sell NFTs across all asset classes, some for $1 and some within the top 5% of most valuable NFT sales worldwide. Momint is a gateway from Web 2 to Web 3, providing an easy on-ramp to crypto and digital assets. It's a place where creators and collectors can buy, share, and trade digital assets. And we use NFT technology to prove ownership and guarantee royalties for creators. We don't charge any gas or listing fees. Momint is open and free to the public. We also have some business tools which solve a key problem for companies interested in launching NFT projects, in that we can send NFTs to an audience that has no crypto wallet. Our API lets businesses get set up and minting NFTs in a few simple steps with flat, non-volatile prices. We're already minting NFTs for blockchain-based games, banking partners, and we even have an e-commerce plugin for online stores. These activations act as a growth hack, acquiring users for us and yielding a 98% profit margin on our fees. Our user base, like I said, has been doubling roughly month on month, and we have a strong release pipeline planned for 2022. We're poised for astronomical growth with a value proposition that is strongly differentiated from all our competitors and a market that is hungry for our service. I look forward to answering your questions.
Great, just in time. Thank you, Ahren. Now over to the angels. Who'd like to start with questions?
I'll go. Ahren, good to see you again. So first of all, I need to make a declaration. So I'm actually already an investor at Momint. So, but I'm still going to ask the hard questions because as an investor, you're just as interested in some of these questions that, than other people do. So Ahren, listen, I think my internet broke up. I want to talk a little bit about metrics. How do you, when you talk about customers, what does that mean? Does that mean one person who's done one NFT? Does it mean, what do you mean by customer? What's your number of customers? What is it? How much, how repeatable are customers? Do they come back? Those kind of metrics, right? Because I think that's key to understanding what the growth of the business is.
Sure. So if I can just ask the team controlling the slides, I've got answers to some of these questions on slides linked, so they can also go up. So I knew we were going to ask about customers. So our customers are between the ages of 18 to 35. So it's very much Gen Z, millennial kind of culture. Typically, our audience is based in Africa, EU, and South America. So you can see the percentage breakdowns over here and what their respective populations are. In terms of revenues per customer, our average revenue per user is roughly $11.42, and our customer acquisition cost is 89 cents. Keep in mind that our fees are a percentage of those revenues, and it works out to roughly 13.8%. In terms of active users, so we've got 10,000 total users. You asked what that means. It means that they've come onto the platform and they've created an NFT on the platform, or they've collected and purchased an NFT on the platform. In terms of monthly active users, we're sitting at roughly 2,400 monthly active users, with that metric growing month on month as well. In the beginning, we believe that monthly active users is always a strong metric to focus on and to drive upwards. But because we're trying to acquire users and give users their first ever crypto assets in their wallet, we believe that there's customer stickiness that comes from that when you have real value in your crypto wallet. And for example, if you have a stock trading or investing app, you may not open it every single day, but because you have money locked up into that ecosystem, there's stickiness that comes along with that. So the users are bound to stick around if we can add enough value to those wallets and list enough value-added assets to keep those users coming back. Does that answer the question? Anything
yes, and what? Well, so follow-on question, and I don't want to hog this, but a follow-on question which is directly related is, what's your customer acquisition strategy?
Yeah, so we have a really, really strong organic marketing approach that we've been bullish on from the beginning, and we knew that it would take some time to build up. But we're documenting the entire process of running the startup from day one. That's live on YouTube, and we release those episodes frequently so people can follow along with the journey. This has two added benefits. So number one, it can acquire customers for us because they know, trust, and understand the business. They know the people behind it. This isn't just a fly-by-night crypto, startup. The other thing that it does for us is it attracts employees. So we've actually had a number of people that we've managed to attract to our company purely based off the fact that they're watching how our company operates and how we go about doing the things that we do. So along with that organic reach, we've gotten consistent organic coverage. We've reached over 200 million unique readers, listeners, and viewers. This comes from the big NFT auctions that we throw quarterly, as well as with charitable projects and other projects that we run through the company. And as an example of this organic reach strategy, you can see TikTok as a use case. TikTok is the #1 social media application for the Gen Z population, which is our target audience. And a lot of the other NFT marketplaces, which would be considered competitors, are on TikTok. OpenSea is the most active. They've been around for 5 years and raised over $300 million in funding. And they've got about 7,000 followers and 19,000 likes. We've been on TikTok for much less than a year, in fact, and we've raised only 600K, and we are already matching their followers and drastically surpassing their likes. And I know this seems like a vanity metric, but it's not, because this is how we convert users towards trusting and converting towards our application. So to answer your question on how we're marketing, it's a strong content marketing approach. We've seen 124% month-over-month growth. And to make up the in-between, it really is typical Google ads, Google search ads mainly. We do a little bit of Facebook and Instagram ads, but not much.
Okay, I'm going to keep quiet now because I have lots more questions, but I'm going to keep quiet.
Laurent.
I'm happy to go. Thank you so much, Ahren. I'm an advisor with a fund that's investing in the space. It's exciting times, a lot still to be defined, right? And the on-ramp and off-ramp of, users is so important. And I appreciate the fact that you've addressed that directly, which is great. I would love to kind of build on Raj's question. He talked about the customer, but tell me about community and DAOs and other things. How do you think about this idea of community as you think about what you're building and creating?
Yeah, so community is so important, especially when we're talking about the crypto space, and building a community is extremely important. This speaks to the content marketing approach as well, right? So 90% of what we're doing in those activities is just trying to educate the population and not necessarily a hard sell on the product. So we do a lot of education on what are NFTs, what is crypto, what is a DAO, right? But I'm so glad that you asked that question, because that's actually a key part of our 2022 roadmap. So we're actually going to be building in completely decentralized peer-to-peer messaging on the application using a decentralized ledger. And then we're attacking on the ability to use DAOs as membership to groups, or I mean NFTs as memberships to groups. And this is effectively a minimal viable product for a DAO, right? So anybody in the world could create a suite of NFTs using Momint and allow those NFTs to give access to a private group on a peer-to-peer messaging platform. And that's how you can build a really tight-knit community or a DAO that makes decisions on a grander scale. So we definitely think DAOs are the next big thing, and we're hot on that space. Yeah, and otherwise, we foster our community on Discord, which is the go-to for the crypto community. Yeah, we've got about 1,000 users in our community Discord, and it's growing. Lots of questions, lots of customer feedback. We operate on a highly iterative approach, so we listen to our users as much as possible, see what they like and love. We often hold polls and questions on what should we build next, what do you guys want, and that's the direction that we move towards.
Great, thank you. I'll let Laurent go get a question in. He looks like he's busy taking notes, so I hope you're ready.
You're completely right, Laurie.
We're actually working with Better Bank.
Well, I mean, you know.
Really, that's good. That's good.
Yeah.
Because we're planning on doing an additional investment in them. So I'm happy to hear that. So Ahren, look, quick question. Give me a profile of the management team, the founders, the people that are fueling this company.
Cool. Great question. So myself and my co-founder, Ahren, we met at university, and right from the beginning, we started building startups. So we failed some, we succeeded in some, and we learned a lot of lessons along the way. Together, we then started a dev house, basically being startup as a service, helping other companies build a scalable MVP and raising on that scalable MVP. But the goal was always, when we found the right idea, the billion-dollar unicorn idea, that we would absorb our dev house and really engulf our lives around that idea. And that's what happened when we formulated Momint. So we absorbed our entire dev team, and then we scaled up a little bit on marketing. So I don't know if you guys can see the slides. But yeah, so Adam and I know each other. We go a long way back. I'm CEO, he's CTO. And then we pitched the idea to Rob Hersoff, who's a South African billionaire, and he's our chairman. So Rob has really been an incredible asset to unlocking doors to rights. I mean, in the beginning, we were considering doing a very, very triple A grade kind of launch with massive celebrities. And, we were on the phone with Post Malone and Jordan Belfort and those kind of characters very quickly. We decided to go for the open marketplace and influencer marketing strategy. But yeah, that's kind of the executive team structure. And we've built a really, really cool team. I love everybody on our team right now. They're really incredible. Yeah, from creatives, developers, marketing. Yeah, we're really scaling quickly but picking our individuals really, really carefully. And I'm happy with every single member of our team.
And, second and last question.
Emoji, by the way. Sorry, Laurent, go ahead.
What are your two objectives for 2022? The two main objectives.
So for 2022, we project reaching $20 million in gross merchandise value. So that's the value of products on our marketplace, sold on our marketplace. That's one key metric that we'd really, really like to hit. And the other one is we'd really like to basically over 10x our users to around 230,000 users using the platform. Those are our minimum requirements.
And what's your current products on the market? What did you do last year, 21?
So 2021, we did $104,000 in sales.
No, you said you had 20 million products was the, so I'm trying to comparable between what you're planning in 2022, what you had last year, right?
Yes, we've done $104,000 in sales. We're planning to do $20 million in sales this year.
Okay. Yeah. So that's called sales. Okay, these are talking about products.
Yeah.
Gotcha.
Yeah.
But how do you, so you're planning on going from 104 to 20 million?
Yeah. So, cool. So how does that make sense? It's driven, we have three key revenue drivers, and I think it makes a lot more sense when we look at it that way. So our first revenue driver is our quarterly auctions, which we throw. The auctions provide us with a lot of exposure and very large cash injections in the short term. Right, so that's a great way to sell NFTs at a high value to high net worth individuals and make sure that those NFTs have a lot of production value behind them. Our second revenue driver is our business tools through our API. That's going to provide us with user growth and recurring revenue in the medium to long term. And then in the long term, our marketplace is going to provide us with revenue at scale through our microtransactions. So that's how we plan to hit that margin. And yeah, like I mentioned, maybe just in the behind the scenes, our next auction is in March, where it's going to be 2,000 people. We're going to be selling a Bored Ape as well as Nelson Mandela's warrant for arrest. And from this auction alone, we're projecting $8 million in sales. So hitting that $20 million mark, I don't think is unreasonable.
Hey, Ahren. Sorry, Laurie, you wanted to go. Please go ahead.
Yeah, sure. Thank you. So I wanted to talk a little bit about the smart contracts. I had just looked at your website, which was great, by the way, and you talked about a royalty being like a 10%. But I would think that that's something that the artist decides as part of the contract. So can you talk a little bit about kind of the key levers of the smart contract? Can the artist define fractional ownership? Is the expectation that the artist may do more than one of the same digital image and sell? Can you just talk a little bit about the framework and the levers that the artist gets to define as part of owning the product?
Yeah, so our smart contracts do have a default 10% royalty. So the artist at the moment can't define that. This is on our roadmap to changing. Our customers seem very happy with the 10% margin. Sometimes with flexible margins, it can get a little bit hairy because you have to inform the buyer as well that when they resell the asset, they need to sell it over a certain percentage in order to make any profit. But when you keep it a flat rate, it's really simple and straightforward for everyone involved. But what's really cool, and I think we're the only platform in the world that can do this right now, is that the artist can define arbitrary royalty splits. So what I mean by that is they can add charities or collaborators to that 10% royalty and the initial sale to as many different creators, charities, or collaborators as they like, and they'll automatically get dispersed the funds. So our smart contract is written in Solidity, and we can deploy on any EVM chain. So right now we support Gnosis by default on the marketplace application. But for our B2B tooling, our customers choose which blockchain they'd like to deploy on. And we can support Gnosis, Polygon, Ethereum mainnet, although then they have to consider gas fees, as well as Solana and any other EVM chain.
Excellent. That's really interesting. Thanks. I didn't realize that. That's a really interesting approach.
Ahren,
do you mind if we introduce a couple of questions from the audience?
Sure.
So how is the competitive differentiation? Question from Jorge Gio.
That was my question too, so there we are.
Yeah, how is Momint different from OpenSea, Rarible, and other marketplaces? Apart from the fact that customers don't need a wallet.
We're massively different, right? And there's a number of keys to this. So the first one is that we're a social marketplace. The reason why we're a social marketplace is because quite a strong key to NFTs is that you're buying this asset that you want to show off, right? Like you want your friends to see it, you want to show it off. So having a social marketplace makes sense in that respect, because you can follow your friends, you can see what they buy. Because there's print editions, you can follow along buy. You can follow your favorite creators, and it really has this built-in creator economy behind it. So I would say the social features is really key. We also did a ton of research behind it and found that social marketplaces result in 60% higher sales conversions than ordinary marketplaces. And a lot of this data was backed off of the performance of e-commerce stores during COVID, for example. So we thought it was really key to do that from day one. And what this results in is that we can have a completely ad-free social media site. And I think in a world where people are growing more and more aware of how when they're not paying for products, they are the product, and their data is being collected and sold to third parties, I think people are really hungry for a social media site that they can use, that they know their data is not being collected, it's not being sold, it's privacy centric. We're the only ones who have whatever data you give us, and we never give it to anyone else. Besides that, I would say our buying model is very different. So we're targeting developing markets, Asia, Africa, South America, and these markets are not as cash positive as America, for example. So I don't think coming into these markets with the same approach where you're just trying to sell NFTs for the highest value would have worked. So on our platform, the average sale price for NFTs is $6.62. And what it really comes down to is creators fueling each other to continue creating more and supporting one another. So on our platform, we've actually got something called a collectible model. So artists can create NFTs and make them collectible. And what that means is that their audience can collect them and pay whatever they want for the NFT. They can collect it for free, or they can pay any amount that they choose. I think this is all of these together make a very, very strong differentiation from any of the competitors. I've got a slide up as well, talking a little bit towards some of the features that we've got over and above the others. We're live on the iOS and Android store. I think Rarible only managed to do that recently, and you can't actually buy any NFTs in the app. So I do believe that we're quite ahead of the game, especially when it comes to features.
Yeah, I love the fact that you guys are targeting emerging markets as a marketplace for it. I think it has a lot of purchase in these emerging markets simply because other options from that may not be as available. So I think the DeFi world can do a lot to bring or level the playing field for African and Asian investors that currently isn't available. Wonderful.
Sure.
Any other questions? If not, then I'd like to go to final thoughts from the... Oh, Raj, you had another question.
So listen, Ahren, first of all, thank you. And, as you know, I've always been very transparent, but I'm learning about this space, and I've learned a lot sort of being involved as an investor in Momint. Could you talk to us a little bit about the sort of process as a customer? What's the customer process, number one? And the thing what you always told me was that you are cheaper than anyone else. And why are you cheaper? What's making you cheaper? Because I think that's kind of the thing that I look to. Is it something that's defensible? Can you carry on being cheaper? I can be cheaper. I've got a big balance sheet, right? So what's making you cheaper?
Yeah, so there were two key questions there. I think I'll tackle the first one around a customer. And even that one breaks down into two, because we've got business customers and ordinary just users of the application. So for ordinary users of the application, you sign up. This is why I say it's like a nice bridge from Web 2 to Web 3. So you sign up with a username and password, something you're super familiar with, and everybody knows how to do that. We generate a crypto wallet for you behind the scenes, and we keep it encrypted in a vault. And then you can link your MetaMask or whatever else if you want to import some other tokens or export your tokens out. So for a user coming on for the first time, it's really simple and straightforward. It takes less than 2 minutes to create an account. And then to mint an NFT, we walk you through that process. So when you create an NFT, and I think this touches on the question that Laurie had around the process as well. When you're minting an NFT, you choose your asset. It can be an image, a video, or a 3D file, which we also support augmented reality for. You can then choose your rights, which are baked into the smart contract. So you can choose personal use rights or commercial rights. Then you choose your pricing model. So is it a flat rate or collectible? And then your royalty splits. Beyond that, you post your NFT, we mint it for you and put it on the marketplace. So we cover the minting fees. The reason why we can do that is because we charge 15% on the first sale. So that recoups all the upfront minting fees that we've done. We have also done some really smart stuff around how we structured our smart contract. There's ways that you can structure your smart contract such that you use as much of the non-gas fee functions as possible to reduce the cost, as well as we're also staking on the network, which means that we make a fee back for as long as the network operates. And that also helps us offset that cost. And that's why we think we have a really strong defensible moat in terms of price. That being said, there are a lot of blockchains coming out now with super, super low minting fees. And we think that the winner in this space is going to be someone who supports multiple chains. It's not going to come down to which chain you support or I think what that cost associated with that is. So that was kind of the customer question. Your second question again, Raj, if you can just, and I'll try and keep it quick because I know we've got another pitch.
No, I've got so engrossed in the first question, I can't even remember what my second question was.
No, so we are running out of time. So we'd like to go to the investors and get final thoughts. Laurent, would you invest?
Yeah, definitely.
Excellent. Quick answer. Awesome.
Definitely.
And just full disclosure, I'm an investor in Momint. I'm also an investor in the next company. But that's not why they were chosen. But,
sounds dodgy, Jim.
They too sing in their car.
That reassures me
do
more.
karaoke, I think.
Yes, you guys need to come and do some karaoke with me. That's a prerequisite.
Well, you know, Jim,
I'll do it just for a ride in the Tesla.
I think the company is, you know, right up what we're trying to do at our ventures, and you know, it's right up our alley. So you know, we're definitely gonna make an investment. You know, so now we have to look at the what's needed, the terms and everything. But you know, we will definitely be in.
Excellent. It's good to hear that. Glad to have you as a co-investor again on another deal. Lori, what are your thoughts?
Yeah, I'm super interested. I definitely want to talk further. You've done a lot of interesting things around the model that make it more emerging market. And I like the business angle with the APIs. I think in general, there's big funders in the space, right? Andreessen's got billions and billions of dollars. They're supporting Solana, you know, their own chain. So I think, you know, the differentiation is important. There's a lot of money, you know, in the system to invest good companies. So I'm very optimistic for you.
Thank you.
And then a question to you, Raj, because I know you already invested, but would you re-up?
So I think the truth is that, you know, I invested with very little understanding of either what Momint does or what an NFT is. I'll be just honest, right? I mean, and I like the concept, and I've tried to learn more, and I think I'm very impressed with what Ahren has done over the last 1 year, and I've been following his journey, and we've been connecting and talking a bit. So I would consider re-ing up. I need to talk to Vishal, and you know, we'll sort of make a decision. We need to look at terms, etc. But yeah, so that's perhaps the answer is yes, but I just need to sort of check back with my partner, but I'm very impressed with what you're doing. The other thing that perhaps quickly is, you know, one of the things that worries me with all of these spaces is that, you know, you can be the cheapest, but there are people with much bigger checkbooks than you, right? And they can make it zero. They can give people money to, you know, they can do an Uber on you, right? So it becomes free, and how do you compete against that? But perhaps that's not for today, but we can have a conversation about that.
Well, wonderful. Thank you very much, Raj, Lori, Laurent, and thank you, Ahren, for the pitch. And best of luck in raising your round. I think we got a couple of intros and commits from this session, so hopefully, good luck with that.
Thank you so much, Jim.
Are people actually investing right now on this? Because nobody knows valuation and anything, right? I mean, how does that work?
Yeah, so what happens on Stonks is there's an intro request or a reservation for being, and then there's an automated introduction after the session between each of the investors. Okay.
So a bit like what we did in the Nest before. So it's not quite click a button, pay your money.
However, one of the great things about Stonks is that they will even facilitate that process going forward. So we did that on a very manual basis, but they will automate that process. And in our case, for example, because we pitched on Stonks, they actually created a roll-up vehicle for us to roll up all the folks who committed through the Stonks platform, which was great. It was
that's cool. That's very cool.
Removed a lot of administration for us, which was
okay. That's very cool.
Yeah.
So in our case, we will have the follow-up or you know, I mean, what would be the follow-up from?
Well, you could.
You just come and talk to me, Laurent. We'll talk together. Don't worry. We'll sort it out.
I'll make an introduction, but you have to sing to me first, Laurent. So
you got it.
All right. Well, great. Now over to Michele and Julian. I don't know who's presenting. While you're putting your presentation up, I want to actually do a quick advertising break and let everyone know who's watching that Untapped actually has opened a community round that we're basically allowing anyone, even non-accredited investors, to invest in Untapped and own a piece of Untapped. So just to clarify, what are you investing in? Well, we're an investment firm and we do investments, but separate from that, we've developed an investment platform that we call Smart Asset Financing. And we believe it'll make it easier and more profitable for investors worldwide to invest in Africa and other emerging markets. And we're making that platform a digital platform that will eventually allow DeFi investors, crypto investors, to invest in emerging markets. We've gone from $0 in revenue from this business model to a revenue run rate of about 1.8 million in less than a year. So if you're interested in reinventing how profitable investing works in emerging markets, you go to our website, untapped-global.com, and click Join Us. And it'll take you to a crowdfunding page that will allow accredited. We'll be raising an institutional round starting in May. So this is really the last chance to buy in at the current valuation before we announce our DeFi strategy, which is pretty exciting. Great. Now over to Michele and Julian, or Michele from Inspira Farms. And again, full disclosure, I'm also an investor in this company. But it's just a testament to how incredible the founding team is and the current management team and what the problem they're tackling. Over to you.
Thank you. Thank you so much, Jim. And good morning, afternoon, and evening, everyone. Probably I'll just get to it as the 120 seconds started already. So Michele Bruni, Inspira Farms, one of the co-founders and chief commercial officer, agroeconomist by training, and I think entrepreneur by nature. Based in Italy, and a pleasure to be here. So at Inspira Farms, we develop and deliver cold chain assets for fresh produce in Africa, and we're here today to try and raise $600,000 of convertible notes. So there are massive problems for the sector that we serve in Africa. Infrastructure is virtually absent and very expensive. And without cold chain, the losses can be as high as 50%, generating very high emissions and a lot of missed market opportunities. So what does Inspira Farms do? Inspira Farms reduces losses while increasing shelf life with a lower than competition OPEX, and providing our customers with access to data, and therefore increasing our customers' bottom line and generating impacts. Our drivers, or our drivers for growth, are really based on market forces. And I think the three main ones are the increase of exports from Africa, the need for import replacements, and the consolidation of retailers in large cities. We have been growing our pipeline and our average deal size between 3 and 4x in 2021. And we have 100% of returning customers on the latest tech version. And at the moment, we're really trying to close a convertible round with an additional $600,000 to grow our sales and try to evolve the business model while preparing for a Series C in 2023. And I would stop there. Thank you.
Great. Perfect timing. Just about to cut you off. Thank you very much, Michele, for the presentation. Over to the investors.
I'll start. Thank you. Gosh, that went by so fast. I was like listening and I was like, wait, I want to know more. So Michele, Julian team, thank you for solving a really important problem. I'd like to say that first, right? I really appreciate the fact that you're solving a real problem that is important to not only the individual customers you serve, but the overall ecosystem. So I really appreciate that. And also, I took a quick look at your page, your web page, and I loved the fact that you also had a product configurator. You know, just the idea that, you know, customers can really understand, potential customers can understand the different options and kind of pricing and really customize it to what they think their needs are before they would even talk to you, right? Now, you know, assuming they have access to that, I just thought it was a really smart idea. I would love to hear more. So it sounds like you've got a great customer base, a customer base that is a repeat base. But tell me, the first time you have a customer what is their situation? Do they have these facilities? Are they upgrading the facilities? Are they growing kind of their land use, and so they need to add facilities? I would just love to understand kind of the first time a customer comes to you, that farmer, what does their infrastructure look like at that time?
I would probably start by saying that we have three key segments. Roughly 65% of the deals is represented by the core B2B, so let's say SME agribusinesses, and we see a fairly wide range within that segment. A lot of them are already connected to the market. They either lease or try and rent fairly old infrastructure. They have fairly inefficient technology, so they have some access to technology. They are somehow already linked to the market, so they already have volumes, assignment, buyers agreements, but they're really like trying to grow, and as well with some difficulties on the access to capex for investing in infrastructure that can be quite expensive. And so for them as well, one of our key thoughts is around making the assets affordable over the next number of years, trying to really make the assets repaid in a much longer period than what is needed to break even on that asset. And at the same time, as I was saying, building as many efficiency in the technology as possible to reduce their OPEX, and allowing them to have solid real-time data to control their throughputs, the quality of their product, reduce rejection, so have control on their business. Mitch, I don't know if you want to add anything.
Yeah, I think that's absolutely right. The other thing I'd add to that is, as we get down the layer and try and serve the smaller customers, that's when it gets even more interesting. And that's when you get into the customers who have got ramshackle, rubbishy cooling. And I've been out with these guys, and they may well have a cold room that's been put together by 10 different pieces that they can't service, doesn't actually do what they need. And I was out with a farmer just a few weeks ago that we've done 20 farms near Mount Kenya, and this guy's just blown away by what we've done. And the truth is, now we gave him a 25 square meter cold room. He worked his kind of butt off to kind of get that. This year, now he's got enough with us so we can finance him, and he's expanding the packhouse. So typically there is a bit of a journey on there. One of the challenges Michele and I are really trying to work on is how do you get down into that smaller scale, right? That's really, really the question I want to get to, because that's where you can impact the loss rates once you get down there as well. For me, I actually think the work that Michele and Co have done on the technology is superb, right? We've got good tech. We can do the technology. Of course, we make it better, but that's not the challenge. The challenge is the business model and the financing, and that's what we're kind of working through today. I have 2 customers today, and both those customers are blown away by the way we're starting to talk to them about kind of linking repayments to their output, which is just unusual in what is, frankly, actually quite a conservative environment. So, yeah.
Hey, can we guys, thank you so much. It's really fascinating. Can we just talk a little bit about business model, right? I'm looking at your website now. You seem to have lots of different strands. It looks like there's an asset financing piece, there's a cloud computing piece. Just talk us through the business model and where's your revenue coming from? And I also want to talk a little bit about the finance piece, because, well, the 2 bits, right? So one, is it kind of asset light, asset heavy? How do you finance? Where's the growth coming from? I'm just confused where you sit within, you're not a typical tech company. You're not a typical asset company either. You're not a bank, right? So in my head, I'm trying to pigeonhole you. Perhaps I shouldn't be pigeonholing you. I'm trying to understand how you fit in with all of this, right? And then what are the margins? Where are the margins? What's your growth? Look, lots of questions, but do you understand where I'm coming from, right? I'm confused, but I'm not that clever, so you got to help me out.
Mitch, do you want to go, or should I start? I would say most of the revenues really come from the deployment of the assets. Okay, so that is the major one. So we are selling on to customers, and then those sales can be either paid directly on commercial basis by the customers, or partially finance. And that is really to make the access to CapEx easier for the customer. Then the data and and other services like after sales services are really starting to generate more and more recurring revenues. And so, especially this year, we have specific objectives to try and ramp up those recurring revenues. We have as well done several pilots to try and shift more and more the business model towards an OPEX-based one. So we started, for example, linking the repayment of the unit with the payments that our customers receive from their off-takers, especially when they're overseas. And so we're going to concentrate really the next 3-4 months to try and validate what the pivot or what the next step in the business model can be to shift from probably selling those assets to try and have a much more OPEX-based model where it all becomes recurring revenues. And so shifting more from the beginning as a tech company, selling assets and doing projects, towards probably managing much more of those assets. And one of the key reasons why we can do that, because we learned how to do refrigeration, but we knew even from before what the problems of our customers were. We were coming as a background from being embedded in the type of supply chains and networks in which they operate. And so we are, we know that in terms of advisory, in terms of solution, in terms of understanding how those assets needs to be operated, we have a very deep knowledge of that.
And so where do the assets sit? Whose balance sheet? Who's taking the risk on the assets and who's taking the risk on the financing?
At the moment, it's mainly us, right?
Okay. And how are you financing
on the finance? Yeah, the finance side, we have a finance partner that we work with at the moment. We're also trying to work with Untapped as well to get some smart assets.
Absolutely.
Yeah.
By the way, I'm an investor in Untapped, so I'm very happy.
See, Raj, how it all comes together, Raj. It all comes together right here on the show for us.
Yeah, we drove up a farm today, actually, after having seen this incredible little farm out in Navasha. And my first comments were like, we need to talk to Untapped. So yeah, I think that's the future, right, guys? And so we again, like, we know how to design really good stuff. We know how to build really good stuff. The challenge for the industry often is how do you know finances? The finance is an enabling function for us. And that's where we can get really innovative. Maybe I didn't say a bit of my background. I just spent the last 5 years working in various kind of C-level positions in M-Copa. And so I'm quite used to this idea of like, what is M-Copa, a solar company, or is it a bank, or is it a product company? And I kind of don't care. Like, what's the right system here that will work for our customers? And we do have like pretty wildly different customers, right? So our smallest unit is like 15 square meters. The biggest unit we've deployed is like 2,000 square meters, right? So we do have quite a lot of variability in there, and the approach has to be different for each of those.
Hey, before I let Lauren, I just had one more question, which I suspect. Could you talk us through your numbers, please? How much have you raised before? What's your numbers? What's your revenue? What's your EBITDA positive? All that sort of stuff, margins, etc. Please.
I can be quite brief. Since we're being broadcasted, I will not disclose margins, but so far we've raised roughly 6 million euros. At the moment, we have a valuation pre-money of 13 million euros. Sales last year have been probably lower than expected at 1.5 million, with a growth of 20-25% over the previous year. And the plan for this year is to at least triple sales, plus, as I was mentioning, validating new business models with different type of clients, and ramping up the recurring revenue side, both on sales and services.
The one thing I just kind of put on that last one that Adam Michele, who slightly underplayed some of the performance of last year, right, is COVID's a major factor for big CapEx type infrastructure investments. But the interest we had in Inspira Farms last year was wild. So the previous year, the The value of the quotes we issued in 2020 was around about 15 million worth of value, right? Whatever. The value of quotes we issued in 2021 was 73 million. Wildly different. And there were some ambitious people in there. Some of those projects have come off, some they won't. So we have got long lead times. We will convert a whole chunk of that. So the expectations of 3xing sales in 2022 seems extremely reasonable to me.
Okay.
So, guys, first of all, congratulations. You guys are doing really good things, especially for emerging markets, and especially in Africa. You said you're working right now in 2 countries. In terms of that's concerned, are you which countries are those, and what targets do you have to ramp up in others? What are the competitors that you have in that space? And also, just give me, an idea, why you opened that company. What was the main driver?
I would start from the last one. Actually, your country has something to do as well with that. I was working with other colleagues in Latin America and the Caribbean, and we had a small investment fund. A lot of the investments that were made in post-harvest were not exactly what we expected. And so over a very, very long discussion, we said, but what if? And the following day, we resigned from that old occupations. So it was really out of experience from a different angle in working on post-harvest, mainly Latin America and the Caribbean. In terms of countries of operation, at the moment we have 100 units deployed in 10 countries. We're about to hit the 11th in Africa. We're working in East, Western, and Southern Africa, with Kenya being the anchor market for Eastern, Zimbabwe for Southern, and West Africa just started this year, but with Ghana as a that is developing as an anchor market, and that is the way we operate. There's countries like Kenya and Zimbabwe where we have a much stronger direct presence, and we're trying to expand, building partnerships on services, on delivery, on project management, with local companies that previously would have been considered competitors, while we're really trying to partner with them to make the market bigger. We play, as Raj as well was saying, type of different roles, and that enables us as well to put ourselves, in the not as competitors of the kind of small developers and installers or small and medium that you can find in countries, but as partners that would allow as well them to grow with a better commercial and technological offer.
Got it. And the competitors?
In terms of competitors, I would say the market is pretty fragmented. Besides South Africa, where the land holding is 1,000 times the average in Africa, so it's a completely different dimension. But in most other countries, we're talking about a number of fairly small companies that have a more or less fragmented supply chain. Then there is 2 or 3 bigger actors. In our segment, I would say, on our core segment, I would say that there's 2 or 3 companies, mainly from Europe, that we're competing with. I do believe that in terms of business model and technology, we are better. And so, part of the idea is to, keep gaining market shares. Then there's companies that do really kind of global contractors, global service, but that is, we just have a small overlapping of their smaller facilities with the largest that we do. And I believe we're becoming more competitive as well on that segment. I mean, I will be able to tell more over the next couple of months, hopefully. But to give an example, we just delivered 2 months ago a fairly small refrigerated airport terminal for a capital city in West Africa.
Great.
Hey, Michele, can I just jump in on? Sorry, can I just jump in on one point Michele made, right, which I think you should be sharing about Michele? So one of our key competitors, we've just taken their director of sales has come across to us. The reason they came across to us was because they saw us as being he saw us as being massively more innovative, and just far more exciting about the way we're going about it and the way we're trying to get infrastructure onto the ground. So, yeah, that's good. Yeah, I feel like we've done some good work with one competitor. There's another one out there we'll continue to kind of battle out, but we are way more competitive. They don't have the data, they don't have the financing, and they're also based remotely. So I think, yeah, I'm feeling good on that front.
And key point for us is going to be Fruit Logistica Berlin, 5th to 7th of April this year. You're all welcome. There's going to be, a lot of fun as well at the booth. We are in the Africa stand, so please come and visit us if you're in Berlin.
Excellent.
I just have
repeat the name of that conference again?
Fruit Logistica is the largest global trade show for fresh produce, where the trade happens, where the technology is displayed. So I think the year before COVID started, it was something like 375,000 people over 3 days, 8 hectares of fairground. So it's big.
And there's a couple of connections from the audience, and then we'll pass it back to additional questions, final questions, and then we'll wrap things up. We have a note from Riki Yamauchi. They're a VC based in Japan and have strong networks with large trading firms and conglomerates, and they also have the conglomerates have an interest in cold chains. So please get in touch with Riki after. I think that intro will happen automatic. Back over to you, Raj.
So just a couple of things I wanted to just get my head on. One is your customer acquisition strategy and your typical customer, and 2 is your burn rate. Those are the 2 things I just want to get my head around.
I'll just speak quickly on the customer acquisition. Depends a lot on the country. We have done massively well under COVID with content-based marketing over webinars, with really, really high attendance rates. We're talking about in over 6 webinars, we've reached over 4,000 individual participants. So really, really high participation. Social media marketing and optimization of SEO has brought in a lot of leads. Then in anchor markets, it's as well through referrals. A lot of agribusinesses share, the trade shows, the same input suppliers, the same advisors. And so, these being embedded in the network, and I'm talking specifically about Kenya and Zimbabwe, and having had satisfied customers has brought in as well some of the most important customers, the ones that in agriculture are the ones that others look up to or try to imitate, which is one of the things that we are most proud. So at the moment, out of for example, the 5 top exporters in Kenya, 3 of them are already our clients. So that speaks a bit on customer acquisition. We are going to go now, Fruit Logistica is going to be another very, very important milestone. And after that, we're going to resume more, social media-based marketing campaigns, especially because social media are giving a lot of freedom to farmers, especially in areas where they're not so close one another. And so there are many farmers are extremely active on social networks. Maybe I'll let you, Mitch, to speak about the burn rate.
Yeah, the burn rate, this obviously, this convertible note gives us considerable extra runway. I don't want to go into obviously all the details on this platform, which I'm happy to talk to you afterwards and give you all those details. But this will give us, I think it's an additional, way over 40 months for us to move on. So there's a lot of comfort once you've done that. Again, I felt very kind of comfortable with the fact that 4 of our key investors reinvested in both myself and Michele as a management team. So yeah.
Well, great. Thank you very much, Michele and Julian, for your presentation and your answers and discussion. like to go back to the investors for last words, last thoughts. Would you invest? Lori?
Sure, I'll start. Our investment thesis isn't completely aligned with Inspira Farms, but having said that, what I love about this is, in my opinion, a very typical but impressive entrepreneurial story where you're not only innovating in the product and service, but in the business model. And I can't imagine having two better people to do that, Michele, with your sector experience, and Julian, with your business model experience, pay-as-you-go, smart asset, financing, revenue sharing, whatever it is. I think you guys are so well suited to continue on this success that I'm really optimistic and positive about what you're doing.
Thank you.
Thank you, Lori. Raj, what are your thoughts?
Yeah, so listen, first of all, again, I think I'd like to echo what you're doing is incredible. I think we need more companies like these to service what I would see as a very underserved part of the economy throughout Africa. I think to a certain extent that I have similar comments, Laurie, that we are kind of pre-seed to Series A investors in tech and tech-enabled. And I feel your business model is a bit too asset heavy for what we're doing. That may be unfair, but that's kind of the way I see it right now. I know the M-Kopa story very well. In fact, the current CEO of M-Kopa is a good friend of mine. Mayur Patel, I don't know whether you know Mayur or not, but he's a good guy. I think the experiences M-Kopa has gone through, I think you probably have got the scars to bear as well as the fruits to show, perhaps. So I think that will stand you in very good stead. So I think that's great. Look, if there's any way I can help, my business partner, Vishal, is based in Nairobi. I'm happy to try and set up something to see whether we can help beyond just, giving you cash. But I think it's a no from me from an investment perspective.
Sour.
Thank you, Raj. And over to you, Laurent.
Yeah, so basically, I have the same issue. We're investing mostly in tech and in Africa and the Caribbean. So it's a little bit outside of our thesis. But also happy to help, especially in Ghana, where in our other businesses we're very well established there. So and in many other countries in Africa. So so maybe we can start a cooperation that side, but on the investment side, we'll have to pass for now.
Excellent.
Thank you very much.
Thank you.
Yeah, understood.
Go ahead, Julian, please.
No, just saying understood. Yeah.
Yeah, I think there's always a challenge, and I think this is great discussion around companies in Africa that are capex heavy or very much focused on building things and providing services with those things. I know in the VC world we're very much focused on asset-light, winner-take-all business models, but I would argue that so much of Africa will need to be fueled on new infrastructure.
Yeah, for sure.
Yeah, absolutely.
And I'm not trying to pitch Untapped again, but I think somebody needs to go after that market opportunity. So we're trying to.
And Jim, I think.
I
think you're absolutely right, and kind of I almost feel bad that I'm not doing investment in the space because I think we're small checks, we're writing big checks. The guys with the big checks, the impact investors who say that they want to change the world, but perhaps you're the typical company that should be able to attract these impact investors who want to make an impact, triple bottom line, all that good story. So I don't think we certainly in our case are that your target investor, right? Your target investor is an impact investor who's really trying to look at it from a different lens, and someone who understands this supply chain issues that are massive across Africa and logistics and the whole agriculture space, which we don't have very much experience. So I think perhaps, unfortunately, we're the wrong angels for you, right? Not that you're not the right company, we're the wrong angels. That's all.
Yeah, and my comment on that is I think some of this is very much around the kind of investment model that investors are investing through. And so I think getting to the right investment models, getting to the investors with perhaps slightly different investment models than your typical VC investor, I think it will really be the trick. So we have a comment from Oleksii Ignatiev. He runs a large 2,000 plus LP syndicate and angel list focused on crypto. Well, maybe not so relevant for Inspira Farms.
Might be better for Ahren, I think.
I should have read that before.
I think it might be targeted Ahren rather than Michele,
indeed. All right. Sorry about that. Well, thank you very much, Julian and Michele, for the presentations, and thank you for all the investors for your feedback. We're at the top of the hour today, and thanks to all of you guys for being here. Thanks to the audience as well. And please don't forget, we host this session every month on the third Thursday of every month. And we also have in-country events throughout Africa. Our next event will be in Cape Town, South Africa, where we'll be hosting investors from around the world in May. So if you're interested, please get in touch with us, or you can contact us through our website, untapped-global.com, or follow us on LinkedIn. And with that, thank you everybody for participating in the show today, and we hope to see you at the next Nest.